What is up, guys? Joe here, back with another video. Today is Friday, October 29, 2021, and Apple stock is making headlines again. Apple is down over 2% for the day on missed earnings and revenue for the Q3 2021 fiscal quarter. Apple did miss on revenue estimates and iPhone sales, and they do blame supply chain shortages. Although they claim demand is high for iPhone and other hardware, investors are not happy with their earnings report. So today I wanted to look at some headlines, do some technical analysis, and analyze if Apple is a buy at the current price point at $149. So let's take a look. So if we jump over to FinViz, here are a couple of headlines regarding Apple stock. Apple warns of supply chain woes while Amazon faces increased labor costs. Apple tumbles after supply chain crunch hurts iPhone makers' sales. Apple Inc. is bracing for even bigger supply chain problems during the holidays than it suffered last quarter when product constraints cut sales by about $6 billion. After reporting disappointing fourth quarter results that sent Apple shares tumbling, Chief Executive Officer Tim Cook said that the shortages in the current period will eclipse $6 billion. Consumer demand has been strong, he said, and supplies haven't kept pace. He attributed the crunch to the chip shortage and COVID-19's impact, though the pandemic challenges have now mostly been resolved. A lack of semiconductors is affecting pretty much most of our products currently, he said on a conference call Thursday. Demand is very robust. Fiscal fourth quarter revenue amounted to $83.4 billion, the tech giant said, missing estimates of $84.7 billion. The supply sparks fresh concerns about Apple's ability to navigate the global supply crunch, which has wreaked havoc on the auto, tech, and consumer product industries. The company has a slew of new products that it needs to get into consumers' hands before the holidays, a period that's expected to set sales record. Here's another headline from Barron's. Apple reports a rare sales miss. Investors aren't happy. And if we jump over to the NASDAQ website, we do see for the first time in years, Apple did miss their revenue estimates. They were almost in line with their projected earnings, but previously in the previous quarters, you can see by this light blue bar, they beat estimates every time. During this quarter, they have plateaued. Flatlined. And if we jump back into FinViz, we do see that Credit Suisse gave it a new rating of neutral and a new price target of 150. But previously, we do see on September 15, Cowen did give it an outperform rating and a price target of 180. Wolf Research gave it a price target of 155, and JP Morgan gave it a price target of 180. So now, if we look at the weekly chart, we do see that Apple has been slowly trending upward. It has been on this upward trajectory beginning in March, and it has been trading in this channel. So this blue line down here would act as support, and above that, this pink line would act as resistance. And generally, it has been on this upward trend, which is a bullish sign, and it has been respecting the peaks and troughs within this channel. And previously, it did post an all-time high of $157, posted back in September. So we can look at it the same way within TradingView. Here's your daily chart, and you can grab your trendline tool and draw your support line down here. That would act as support, and above, this would act as resistance. As you can see, Apple has been trading within this channel, and it has been respecting the trend lines every time it's bounced off the support. Here, bounce, all of this, bounce, and been rejected by resistance up here. Reject. But the good thing is we have been making higher lows here. This has maintained above the support line, which is bullish. So it does seem as though we will continue to trade within this channel until we get some positive catalysts from Apple and the company can continue delivering on their iPhone, iPad, hardware, and software sales. So now, before I forget, we can jump over to the bar chart, and we do see that the most traded stock options for today was Apple, and we had an option volume of over 2,300,000 traded, and it was a ratio of 71% calls versus 28% puts. So this is generally a bullish signal. This does mean that investors were buying the dip, so there is hope for Apple moving forward. Now back into TradingView. In order to get a better look of where the stock could be headed next, we can draw some Fibonacci retracement zones in order to predict support and resistance lines and where the stock could be headed next. So what you want to do first is zoom out here And you grab your Fib retracement tool, and your first anchor would be placed at the lowest point of the stock, posted back in March 2020. And the highest point would be anchored at the previous high point of the stock, which is posted back in September 2021. Drop that right there. And you do see this dashed line running across would be your ultimate support, stretching from March 2020 all the way till present day. This is long-term support, and generally speaking, like I said, it has been in an upward momentum. It has been bullish. It has been rallying for the past couple of months. So now we do see that Apple was trading in this range, and that is between the 78% retracement zone and the 100% retracement zone. So support would be found down here, and that's a price target of $134.93, and absolute resistance would be up here, and that is a price target of $157.31. So now we can zoom in here. So now, like I said, I do fully expect Apple to continue trading within this range. And your support line down here would be the 78% retracement zone, and that's a price target of $134.93. And resistance up here would be revisiting the all-time highs, and that's a price target of $157.31, which is your 100% retracement zone. So now looking at our RSI, we did hit the 70 point mark up here, which means we are at overbought conditions. So I do expect Apple stock to cool off for a bit. There were investors buying the dip, but maybe buying too much of the dip. So I do believe you can get a better price entry on this name. The stock is dipping for good reason. So unless Apple can really excel during the holidays, unless they can surpass their estimates for holiday sales, you should expect Apple to continue trading sideways until we get a really positive catalyst to push it forward. So now if we turn on our volume profile tool, we do see that our point of control is this solid red line running across, and that is validating my point. Like I mentioned, this red line indicates where the most volume is traded, both on the buy side and the sell side. And that's where an active war is happening between the bears and the bulls to regain control. So think of this red line, this point of control, as a trend line, and expect the price to fluctuate up and down between this trend line until we can get some type of resolution, either to the upside or the downside, and we'll know whether the bulls or the bears would win. And this point of control also illustrates where a lot of demand for the stock is. And like I said, we could be trading sideways here for a while. There is a lot of demand at this 146 price point here, but also you do notice that demand falls as you go lower in price, and the next zone of demand would be down here, and that's the 133 price target, illustrated by these bars, meaning the next level of support would be roughly that area, 133, where investors are looking to buy the dip even harder if the price were to fall to that level. And if you want an official definition of what point of control is, the widest horizontal row of the volume profile indicator defines a specific area at which the most volume is traded over the specified time period. This specific price is referred to as a point of control. The range of prices around the point of control that contain 70% of total volume for the period is called the value area. Again, red line here is your point of control, and that is where the most volume is traded, and there's a war happening between the bulls and the bears to gain control. So what is volume profile? Volume profile are these bars illustrated to the left hand side, and instead of showing volume over time indicated by the volume bars down here from left to right, this volume is illustrated as volume over price, and this is illustrated from a top to bottom manner on the vertical axis. So now here's a technical definition for volume profile, also known as volume by price. Volume by price is an indicator that shows the amount of volume for a particular price range, which is based on closing prices. Volume by price bars are horizontal and show on the left side of the chart to correspond with these price ranges. Chartists can view these bars as a single color or with two colors to separate up volume and down volume. By combining volume and closing prices, this indicator can be used to identify high volume price ranges to mark support or resistance. So again, in conjunction with Fibonacci retracement zones and this volume profile indicator, I do think that we will continue trading sideways for Apple. I am neutral on the stock. Long-term bullish, but short-term neutral. I do think you can get a better price entry on the stock if you wait to buy the dip at roughly the 146 price range. But if we break through that, our next level of support would be down here. And if you look at your volume profile bars here, there was a lot of demand at the $133 price point. Keep in mind, if the stock were to fall from here to the next level lower, this would be a quick descent downward, judging by the volume. Volume is falling, not a lot of action, not a lot of volume happening here until we reach this support level down here at the 133 price target. And that would be your cue to buy the stock, buy the dip. My honest opinion of Apple, judging by the chart, is wait for a better price entry. By combining all of these tools at your disposal, you can have a better idea of where the stock could be headed next. So I hope you found this information helpful. If you have any questions, please leave a question in the comment section. I'll be happy to respond. Don't forget to like and subscribe. I'll see you on the next one.